Hey traders, happy Friday, happy PCE Friday. We just had the big inflation number released at 8:30. We will get into that in today's show because this is a significant shift in what's happening in the overall target rate probability picture. What does that mean? Is the Fed going to hike or not? And it's looking about as hawkish as it's been in a while. So let's take a quick peek at how this is being responded to, right? So if I'm saying that the Federal Reserve might hike in June or even July, how come we're not seeing a meltdown in equities? Well, we'll see what happens after 9:30. But the PCE definitely rearranged expectations far more to a quarter point probability in the June meeting and possibly the July. S&P trading above the previous session close. So there's a line in the sand there. We're trading above it. NASDAQ's punching up to higher highs. We've talked about this for a long time in our free videos and the Sector Secrets Mastery. Pretty much anywhere that I could, I've been trying to emphasize when an index has its three main sectors that are bullish, that are pointing in the upward direction: XLK, XLC, XLY. Those are the three cylinders of this motor we call the NASDAQ. When they're all heading higher, please don't go try picking a top, right? And yes, NVIDIA gave the NASDAQ a heck of a shot in the arm, but let's not forget, Apple's already been moving higher. Meta's already been moving higher. Amazon even broke through its 200 propulsion and it turned into an uptrend in this month. We know Google's been moving higher. We know Microsoft's been heading higher. These are those high concentration weighted high concentration weighted stocks that tell us where our direction is most probable, right? When those are heading higher, the futures contract is likely to be heading higher too, because the thing we need to remember always is that a futures contract is really just the NASDAQ, the S&P, the Dow. It's a bundle of stocks wrapped up in leverage, right? Okay, so that's what we've got here this morning. The one place we definitely see the hawkishness play out is basically the one place we would expect it to play out, which is the yields, right? So remember, as ZB, as ZN, as the shorter end of the yield curve, ZT move lower, the thing to remember is that reflects higher yields. But it doesn't guarantee that we're going to sell off in equities, right? It does not mean the equities are going to crumble. And it hasn't so far, although I will be much more interested in taking a pulse of this market at 10. Okay, so that's a quick run through what the charts look like. And then let me at least show you what the FedWatch tool looks like. And you'll see here, this is the June month of June. 56% expectation of a quarter point hike, 43 and change percent. That's the hold column, gang. The hold column is to the left, the hike column is to the right. Is it about 50-50? Yeah, right now it's a little bit better than a coin toss, but this is as hawkish as it's looked. 50% chance that we're at 5.25 to 5.5% in July, or even another quarter point hike. So this is far more hawkish than it's looked in a while. Again, we don't front run what the Federal Reserve is going to do. We react to what they do. The quicker that I accepted that trading is counterpunching, the more I became successful as a trader. And by the way, for those of you in the futures room, options room, Sector Secrets Mastery, we're going to talk about what's been working this week, right? I'm going to go over the trades that I've taken, mostly in the futures room, but we can talk about the ETF alternatives, the stock and ETF options as well. But I'm going to go through what we did this week. This is a very tradable environment. Don't let anyone tell you otherwise, right? I've got 700 Mastery members who will tell you, hey, yeah, we slayed this week. Day trading. Why is the day trading working? What window of day trading is working, and what have we been focusing on? I'm going to get into all of that this afternoon at 3 o'clock for our Ask Me Anything session. And for those of you that aren't members, I still have you in mind. I'll make sure the free video today touches on some of those points. But if you've never thought about joining us in one of the rooms, today would be a terrific day to do so, because we're going to go over what's working and what's been working well this week. Okay, so let us get into the questions. First up, from our training room. Hey there, shout out to our training room, RPJ. All right. UNH. Healthcare is a dumpster fire, my friend, something I'm sure you already know. UNH is the number one weighted stock within it. Lots of pressure in that UNH. If we go through the process that I teach, sector, index, stock, XLV is heavy and under pressure. UNH and Johnson & Johnson are going to have to follow suit. So I would favor the short side at resistance in UNH. That would be what I'd focus on. So if you're short with puts, your long puts taking advantage of weakness, fantastic, RPJ. Way to follow the momentum or the 1 hour trend. I would basically focus on resistance for building those long put positions, and then keep an eye on support so you make sure you pay yourself. But well done. Yeah, I've got nothing to add there. Very nicely done. All right, next up, let's bounce back to our YouTube channel. And RD asks, good morning. Any thoughts on an entry in Pepsi? Sure. So let's think about where Pepsi is in terms of the overall weighting. I always like to think about index sector stock. Pepsi is not part of it's interesting. Pepsi is actually, as you can see here, heavily weighted in staples. Staples are a defensive sector. I know a lot of you know, okay, staples, utilities, defensive. Then I want to ask myself, is there really a defensive play going on in staples? In other words, is there risk aversion where traders and investors are seeking cover? And they're not. Risk appetite is alive and well. How do we know? Simple contrast, gang. XLP moving in an opposite direction from the NASDAQ. NASDAQ's moving higher, XLP's moving lower. That's a pretty confident amount of risk appetite. I would also keep an eye, though, on Pepsi because of Procter & Gamble, Pepsi, and Coke. It's a good choice, RD. It's the one still sitting above the 200, right? So if we go down and test that area around 180, I definitely keep an eye on that for a potential buy. All right, what are my views on structure and momentum in consumer discretionary? Sure. So coming from our free trading room, and that's the other side of the coin, right? When it comes to consumer staples on one side, consumer discretionary on the other. Consumer discretionary is heavily weighted within the, if you think about where we've got weighting in consumer discretionary, it's heavily weighted within the NASDAQ. And a lot of folks don't associate consumer discretionary with the NASDAQ when in fact it's a pretty important corner. So if you take a look at XLY, I would look at the structure of the XLY itself as hanging on loosely to a really not all that confident 200 exponential moving average. But Earl, let's also think about relative performance. And there's two places that if I'm looking to buy XLY, I may not go with the tide XLY, I might go with a boat. What boat? Well, the biggest one in XLY is Amazon. That's in a trend, right, Earl? So I'd probably focus on Amazon over the XLY, an individual relative outperforming stock. And then second, I'd focus on CMG. So books and burritos. That's what's working in consumer discretionary. And that's not a bad combination, books and burritos. Who doesn't like a book and who doesn't like a burrito? All right. Or a bowl. I don't know. I haven't been to Chipotle in a long, long time. All right. So next up is Sachin asks, hey there, Sachin, what do I mean by counterpunching? Sure. So Sachin and anyone out there, if you think about boxing or if you think about defense in sport, MMA, right? Counterpunching is the concept that works for me, which is let the opposition make their move, right? So in the case of the market, I'm not saying it's an adversarial relationship, but let the market make its move. I'm not bigger than the market, right? The old joke is until I write a check and the bank bounces, I've got to respect where I am in the food chain of trading. So let the market make a move, and then I'll see what that move opens up for me, right? So what does a really good boxer do? They'll jab, 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 parry. What does a really good defense do? They watch what the offense is doing. They're looking for patterns. They're looking for their opening. I think our job is the same. So by counterpunching, I mean, I'm not trying to front run the broader markets. I'm not trying to impose my will on the markets. That's never going to work. What I am doing is let the market make a move, and then I'll see if there's something I can capitalize on. That's what I mean by counterpunching. Let the market go first. Let's not think we are, omniscient. Let's not think we can see the future. Let's remember that after the move, price might give us a setup from which we can manage risk. And that's what we've been doing all week, whether that be as day traders, as swing traders, etc. So I hope that makes sense, Sachin. Yeah, sometimes I like my quirky analogies, so I apologize, but I hope that makes sense now. All right, next up, what are my thoughts on Starbucks for a short-term short? Starbucks. All right. Short-term short in Starbucks. Well, we are below the 200, Dry Warrior. And on the daily time frame, that puts us in the bearish hemisphere, as I like to call it. Short-term short would really ideally be on a 1 hour time frame or a daily, and a short-term short on a 1 hour would give us about a 1 to 3 day time horizon. So really simple. We automate everything on the chart so that all we need to do is either place alerts or let the alert associated with the indicator do its job and ring and ding and tell me that it's time to do something. The gold area on that center chart, that's the daily price movement range. I would wait for price to move up into that area. I'd build a long position in puts, right? Or you can short the stock, but why not use that nice leverage of an option? And I would buy puts in that gold area. As long as the market structure, the market trend is red, look at those 2 rows of colors, the very bottom of my chart, probably the most important indicator on this chart because structure dictates strategy, and the structure is absolutely bearish on that 1 hour. So short-term short, yeah, I'm with you. But that's where I would do it. And that zone is sitting right now at 101.40 to 102.60, that area there. All right. Let's see here. Next up is, hey there, Ann. Ann's got a question about This Week in the Markets, which is my newsletter. We've been doing that now for about 2 months. And if you haven't checked it out yet, you can check out a $7 trial, by the way, at thisweekinthemarkets.com. I know it's a big sentence, but it's www.thisweekinthemarkets.com. And the question is, hey there, Ann, when Raghee says This Week in the Market has a video, am I referring to the Sunday show? Oh, no. And there is a premium video that we upload into the dashboard for the This Week in the Market newsletter. And that goes up on Friday. And then the new report is posted Monday morning, early Monday morning. So no, there is a premium video for you all in that section of the dashboard. Yes, absolutely. All right. Thank you for the question. And yeah, I think a lot of folks are not aware that A, I'm doing the newsletter, and B, they get not only the report, which is roughly 10 pages, sometimes a little bit more, depending on what's going on that week. And we have a video that you can watch at your leisure over the weekend. And we have a long weekend this weekend, of course. Memorial Day is on Monday. Today is the last trading day of the week, and we go into a long weekend, which makes things even trickier. The report will come out on Tuesday while we are all enjoying some time with family and friends, remembering what Memorial Day is all about. And then we will then put the report out Tuesday morning. Yeah, but normally it goes out Monday morning. All right. I hope everyone has a good long weekend and planning some time away from the charts. I've got a whole thing. I've got a whole course I just signed up for on ChatGPT. I've completely gone down the rabbit hole, and my new challenge is creating a series of prompts to create a portfolio using ChatGPT. Why not? It sounds like fun. So that's what I've got planned this weekend. All right, next up is gold. Hey there, Billy. So gold and XLE. So we're going to look at gold, Billy, what I'll do is I'll start with the futures contracts of GC. And if we are seeing a more hawkish Federal Reserve stance, that's what we're expecting, that means that yields are going to continue to go up. And that means real yields are also continuing to go up. And that might put a little bit of bearish pressure on gold, which suits me just fine, because bearish pressure is likely to do what, for the most part, has been working, which is buy the gray area, take profit in the gold. Buy in the gray area, take profit in the gold, right? Buy in the gray area, take profit in the gold. Is it going to work every time? Nothing works every time. However, at an oversold neutral zone, waiting for the lower low of support. What is support? It's buyers. It's a floor. It's demand, right? Waiting for that volatility-based zone of buyer support demand, that's going to give us a higher probability for follow through to the upside. All right. Okay. So what does that mean for GLD? Billy, it means that when GC is in that gold zone, long calls in GLD will be what I'm looking for. When it comes to XLE, Billy, I would just assume get a little bit more clarity on crude oil. And once I have some clarity on crude oil, what that will free me up to do is understand where, say, the likes of Exxon and Chevron are heading. Now, why do I care about those two regarding your question on XLE? Because Exxon and Chevron are the number 1 and number 2 stocks in the XLE. And if those are heading higher, XLE is heading higher. If crude oil is heading higher, it's going to have a bullish impact on XLE. The problem is XLE is in a big old downtrend. So just as I spoke about before, being below the 200 is generally bearish territory. The gold area, that daily price movement range zone, the historical volatility zone of resistance. What is resistance? It's a ceiling. What is a ceiling? It's sellers. What do sellers bring? Supply, right? It's all the same thing. So that resistance level, ceiling, sellers, supply, is where I want to build possibly a long put position. So I'm bearish on XLE for as long as that multi-trend reading is down. So Billy, that's the plan. Structure dictates strategy, and the structure that I have right now is bearish. All right, next up. Hey there, Jim. In day trading, do I consider any impact from transitions that occur around 11:30 when the euro markets are closing? So Jim, yeah, one of the things that absolutely, there's 4 factors, and I'm so pleased you brought up time. There's 4 factors that move any market. Obviously, price. Most traders stop there. They're ignorant of the other 3. The other is volume, volatility, and lastly, time. And I'm actually trying to find an image that I love. Where the heck is it? And it reminds me, because I think it's really important to remember, that there are these factors, and if you don't know they're there, it's not going to end well. There it is. Let's see. It's not going to end well, and this is what I'm talking about. So most traders, all they see is that very top. They think about price. Their indicators are price, and that's it. But look what's underneath, and that's where your ship can sink, quite literally. So the way that I look at this is specifically 11:30. You asked. I actually start factoring in 11 o'clock because that is the London fix. So you're going to start to see some settlement action around 11. And that volatility is 10:55 to about 11:05 Eastern. I always talk in East Coast time, gang. That is the time zone of the market. And then 11:30 is when I will absolutely call it a day for the morning. My day trading window generally throughout my career has been 9:30 to 11:30 Eastern. Right now, and one of the things I'll be discussing in the Ask Me Anything as I go through this week's day trades with you all, what did we do this week? What worked? What time frames worked? The window that's working right now, Jim, is 10:35. So when we study when we enter a trade and how that win rate played out, what I'm noticing is that trades entered after 10:35 have not had the same win rate as trades that I enter between 9:30 and 10:35. So do I consider the impact? Absolutely. But I think I start probably a smidge earlier than 11:30. I like to start thinking about 10:55 to 11:05 as that day trading clock window, right? That's the way that I process it. All right. So next up is, let's see, Ben says, no, Ben, I'm broadcasting across 5 channels. And yes, thank you for being here. Thanks for the likes and for the questions and everything else. Yeah, absolutely. CNE Deborah says, do I mind sharing the chat? No, it's, the course. Oh, the general course is from OpenAI, right? So how does ChatGPT 3.5 and 4.0 work? And then based on how I'm learning to prompt, I'll be working on that. So it's not a course on investing. It's just a course that OpenAI has done about the general language, right? How that works. And then I'm going to be working up the kind of what I'm curious, right? But if anything interesting comes of it, yeah, I'm sure Trish and I'll work something up. But right now it's just a bunch of ideas bouncing around in my head. Yeah, I'm sure I'll have more to share with you all later on. Okay, gang, as always, thank you so much for being here for Charts and Coffee. A big reminder, today's free video, I'm going to walk you through my day trading. So this is going to be probably a little bit longer a free video. I want to make sure it's a free video so everyone can benefit. If you've had a tough day trading week, I'm going to talk about what times, time frames, and tactics. Oh, I didn't realize there's a nice, the 3 T's, times, time frames, and tactics in the video. What's working right now? Why are we up pretty darn big this week? And what is it that I'm going to do next week? Because as long as we have the debt ceiling issue and as long as we have the concern about what Powell and company are going to do next, the day trading is working and it's working well. I'll discuss some of this in the Ask Me Anything at 3 o'clock. So if you haven't joined us yet, check out one of our $7 free trials here at Simpler, and I'll see you then. And 6 o'clock on Sunday, this week in the markets live, we'll go live. So be good to each other, gang. I will talk with you soon. Thanks for being here. Caffeinate and dominate, my friends. I'll talk with you soon.